We are all aware of the ongoing cost of living crisis, the rising inflation, and the cost of items in the shops all attest to the fact that we live in some difficult times. The Bank of England's response to this has typically been to increase the interest rate with the aim of mopping up some of the money in the system. And these have real implications for borrowing, for loans, and even mortgages. A year ago, you could easily get a loan for under 1.5%, but today you'll be lucky to get anything under 5%. There are already rumors that come 3rd November, the bank would increase the rates even further. And it feels like this is never coming to an end. But what if I told you that there is a way you could actually make this rising interest rates work for you? It all depends on your situation and how you position yourself. And so in this video, I'll be explaining to you how you can benefit from these ongoing rising interest rates. Stay tuned. Hello friends, and welcome to Diaspora Careers in Investments. My name is Shadrach, and in this video, I'll be explaining to you how you can benefit from the ongoing cost of living crisis. Well, specifically, how you can benefit from the ongoing increasing interest rate by the Bank of England. So let's dig in. First, can I ask you to pause this video? Yes, click on the pause. Pause this video and go to your bank account app and check your current account or your savings account to see what interest rate you are receiving on your current account or your savings account. I'll give you 20 seconds to do that. What rate was it? What rate are you receiving from your bank? Was it 1% or 2% or 5%? If you were receiving anything under 2%, then I've got news for you. Leave that bank or switch from that bank. Because we know that the current inflation is around 10%. Well, officially, they say 10%. So that means that the sneakers or the salt or the bread that you bought for, say, £100 a year ago, today will be worth 110. So that if your money is sitting in the bank and it's not giving you up to 10% in interest rate, your money is losing value. I know that 10% in interest rate here in the UK or even in the developed world or in America, maybe, too idealistic. It doesn't, exist. But there are banks which are offering up to 5.1%. Yes, you heard me right. And these are just regular banks. So banks like Barclays Bank is giving 5.1% in interest rates. Chase Bank is giving 2.1%. Nationwide and Sainsbury banks are giving 2.1%. And in fact, the Yorkshire Building Society is giving 2.75%. At least these are better rates than whatever you saw if it was under 1% or even under 2%. Given that inflation continues to rise, you want to put your money where you get the best value. And so I would encourage you that if your bank is giving you under 2%, then certainly open another bank account with any of these banks that I've mentioned, including Barclays, which I know most people do bank with. In the description box below, I will put a link to some of the best paying interest rates with the various banks. Do check them out and open a new bank account. Another strategy, instead of opening a new bank account, can actually be to switch bank account. There's a difference between opening a new bank account and then switching your bank account. If you open a new bank account, you could maintain your old bank. You don't necessarily have to close it. But if you switch, what the new bank does is that they write to your former bank that whatever your name is, has told us that they want to close their account with you. And then they move all your details from the former bank to this new bank. But there is a catch. Some banks are offering up to £175 for you to switch. But remember, if you use the switch guarantee, they would move everything from the former bank to this new bank, including your direct debits, your savings account, your current account, whatever would be moved. And because you use the switch guarantee service, if any money is deposited into the former bank account, the one you've closed, it will be moved into this new bank account. So, why not? It could be a good catch. Remember, though, that because they would close the former bank account, it could have implications for your credit score. I have a video where I've explained 5 things you could do to increase your credit score. If you've not seen that video, it's very popular. Do check it out. Because your former bank may be your oldest bank, you want to be careful before you close it because that can reduce your credit score momentarily. But hey, if you're getting 175 pounds, is it worth the little loss in credit score? Perhaps. So do definitely check it out. But whether you use the switch guarantee option or you can choose to open a new bank account with any of these banks that are offering the high interest rate. And that is what I have done. I have opened a new bank account with Chase Bank because they're offering 2.1%. And though it's not, Barclays offering 5%, I mean, it's still better than 0.2% by my former bank. I must also warn that you should beware of scammers and ensure that your bank that you open with is regulated by the Financial Conduct Authority, which guarantees you that if the bank or the financial society should go bust, they would refund up to 85,000 of your money to you. So please do check it out and ensure that you are opening with a credible, bank or a credible, building society. The second point is don't overpay your mortgage or your loan, but it depends. I did not say don't pay your mortgage or your loan. I said don't overpay, but it depends. If the interest rate on your loan or your mortgage is under 2%, then I think it doesn't make sense to pay that off or to overpay that because there are so many banks or building societies who would offer you more than 2% in interest rate. I've just told you in the former point that Barclays Bank would offer you 5%. So instead of overpaying your mortgage or your loan, which you would not get back, why not use that overpaying money to invest or to save in these building societies or banks so that you earn more on it? Remember, for those with mortgages, if you overpay your mortgage, this is money you will not get back until the end of your fixed term contract because it will increase your equity and hopefully the interest rate will come down subsequently. But if you have a mortgage of, say, 1.5% and you're overpaying, essentially you are overpaying a loan of 1.5%, which you could have simply used that overpayment money to put in an account that will earn you 5%, to earn a difference of about 3% extra income or extra interest. So I think this is, a no-brainer, but you must be aware that unlike the overpaying of the mortgage, which when you pay, you don't get back, for these bank accounts that are offering, say, 5% with the Barclays and others, these are monies you can easily access. So if you think you're not disciplined enough not to touch these monies, then perhaps you may want to overpay so that the money is locked and you don't get it back. But if you can be disciplined, then perhaps you may choose to put it in these high interest paying bank accounts so that at the end of the period, you take that out to pay off the mortgage. You could also fix these overpayment monies in other accounts that even offer you more than, even 4%. And there are several of them. I'll put a link to it in the description box below to check out those banks that offer higher interest rates in these times. And that leads to my final point, and that is something known as stoozing. And that was a point that was coined by, I think, Martin Lewis and his colleagues. So what is stoozing? Stoozing is simply borrowing at a low interest rate and then saving or investing in a high interest rate paying account. And I have recently stoozed, if that is a variable, whatever that is. Stoozing simply means, borrowing money at a lower interest rate and then putting it in an account that pays more. And you may be wondering, is there a place that is offering, low interest rates in this weather or in this season? Yes. I recently got a credit card that offers 0% for 25 months. 25 months. Yeah, that's over 2 years. So if you could get a loan for 0% for 2 years, that means you could take that money out and then invest in a bank that is paying or save in a bank that is offering, say, 3% or 5%. And then at the end of the period, you just take the money to pay it off and then take the difference in interest you've made because you are borrowing at 0% and then just saving at 5%. It's a no-brainer, but you must be careful how you go about it. In my case, I got a credit card that is offering 0% for the next 2 years and 1 month. Given that it's a credit card, you must be sure to pay the minimum payment every month. Remember, it's 0%, so even if I pay the minimum payment, there is no charges for up to over 2 years. But at the end of the 2 years, you must have the money ready to pay it off. If not, the interest rate is a killer one. Remember, however, that I am putting this money in a savings account that is offering me, say, 5%. So I just take the money and then I pay them off and I take the interest out. Simple money as that. So this could also apply to you. Maybe yours is not a credit card but you could actually get access to a lower loan, say 1% or 1.5%, and then put in a bank or a building society that is offering, say, 5%, and then still make the difference. You must remember, though, that you cannot use these credit cards to withdraw cash directly. And there are several ways to go about it. For example, if you're going to buy a car, you can use the credit card then to buy the car and then pay the minimum per month. And then the money that you would have used, your physical cash that you'd have used to buy the car, you'd rather invest that. So essentially, it is still borrowing at 0%. Be careful, though, that these 0% credit cards do not entice you to take on more debt than you would ordinarily do. Because if you don't pay within the 0% period, the interest rates afterwards are a killer one. I think currently what I have is over, say, 30% if you don't pay within the 2.5 year period. So that is something to be aware of. So if you are disciplined enough, then you can make this work for you. So just to go over the points that I've raised. 1 is to get a high interest paying bank account. And I'll put a link to it in the description box below. 2 is to not overpay your mortgage or your loans that are lower than the interest rate you can get on these high paying bank accounts. 3 is stoozing, borrowing at a low interest rate and putting it in a high interest paying bank account. I'll put a link to several cards that offer this 0%. And if you'd like to discuss this further with me, do check me out on Facebook or other platforms and then do send me a message. I'll be happy to make an appointment with you. I hope you found this video helpful and then you are able to share it with your friends. Kindly do subscribe, do share it, click on it here, click everywhere, and then I hope you found it helpful. I know we live in challenging times and I only seek to spread hope and give some, inspiration. This does not solve the inflation problem, but hopefully it puts a bit of money in your pockets. Stay blessed and keep hope alive.